About a quarter of my clients right now are asking me the same question. Should I buy now or wait for rates to drop? Here's the honest answer nobody else will give you. It depends. Not in a wishy-washy way, in a specific math-based way. Let me show you the framework I actually use. Let's start with the honest truth about waiting. For most of my clients who've waited over the past few years, it hasn't worked out. Home prices kept appreciating, rates stayed elevated, and they missed out on both the equity growth and the specific homes they wanted. Here in the South Sound market, prices have stabilized recently, but that stabilization doesn't undo the appreciation that already happened. Look at Tacoma specifically. North End Tacoma is trading at a median price of about $675,000. Tacoma overall is closer to $500,000. If you were waiting on the sidelines the last few years, you watched the North End appreciate meaningfully year over year. Here's the thing about waiting nobody talks about. I had a client wait about a year. Rates dropped very slightly, but he found an absolute bargain of a home that wouldn't have been on the market when he was originally looking. That's the key. You never know when the right property is going to show up. And here's the anchor line I want you to remember. You can refinance a rate, you can't refinance a purchase price. Now the flip side, when do I actually tell clients to wait? Here's my honest framework. It starts with one thing, payment comfort. My main goal for every client is that you're comfortable with the financing options that I'm providing. If you're not comfortable with the payment, we wait. Simple as that. Now, payment comfort isn't the same for everyone. Someone at a 45% back-end debt-to-income ratio making $15,000 a month has a lot more disposable income than, say, someone at the same 45% debt-to-income ratio but making $7,500 a month. Same ratio, very different realities. So when I'm running numbers with a client, we just don't look at the ratio, we look at what's actually left over after the payment. There are other times I tell clients to wait. If your credit needs meaningful work, if you don't have enough saved for a comfortable down payment, if you're in a life transition, whether it be a job change, an imminent move, or relationship changes. Those are legitimate cases, but I heard rates might come down is not by itself a reason to wait. The market timing game seldom works out. So when does buying now make sense? The strongest argument I can make to clients who are financially ready but nervous about the rate is this: wealth building. It's not even close. According to the most recent Federal Reserve of Consumer Finances, the typical homeowner has roughly 40 times more net worth than the typical renter. 40 times. That's not a rounding difference. That's a life-changing gap over decades. And it comes with a few things. Equity building as you pay down your mortgage, home valuation over time, appreciation over time, and the tax benefits of home ownership. When you rent, you're paying your landlord's mortgage. When you own, you're paying your own. That distinction compounds year after year. Now, you might have heard the phrase, date the rate, marry the house. The idea being buy the home you love, refinance when rates drop. That phrase has gotten a bit overused, but it's still true in specific situations. If you're a move-up buyer looking at a very long-term home, you'll live there for 15 or 20 years, the current rate matters less because you'll refinance multiple times. If you're a first-time buyer who might want to move in 5 to 7 years, that phrase applies less cleanly because you might not be around long enough to refinance out. So here's the framework I actually walk clients through when they ask me this question. 4 questions to ask yourself. Question 1, what kind of monthly payment are you comfortable with? Not what's the maximum you qualify for. What's comfortable? Because comfortable means you can handle a bad month, a car repair, a job change. Comfortable is what keeps you in the home long term. Question 2, What does that payment look like in your target area at current rates? This is where a broker comes into play. I can show you specifically at your target neighborhood, at your down payment level, and at today's rate, what your actual payment would be. Real numbers, not internet estimates. Question 3. Do you have the down payment to reach that comfortable payment? If not, that might be your real answer right there. Save more and then buy. Not wait for rates. Save for the down payment. Question 4. And this one's for the wealth building question. Are you building someone else's equity right now, paying rent, or are you ready to start building your own? If you can afford the payment, that 4th question usually tilts the answer. And there's one more thing worth knowing. When rates do drop and you're thinking about refinancing, I like to use a 24-month rule. If the refinance breaks even in 24 months or less, meaning your payments pay back the closing costs on the refinance within 2 years, it's usually worth doing. That's a concrete number you can hold on to for later. So here's the meta answer to the buy now or wait question. The decision isn't really whether to buy. The decision is whether you are ready. If you want to run your specific numbers, head to johncobainhomeloans.com. I'll walk you through the framework with your actual situation. No pressure, no pitch. If the math doesn't work, I'll tell you to wait. Next Wednesday, I'm going to cover how to actually shop for a mortgage, broker versus retail versus bank. Worth watching before you make any decisions. I'm John Cobain, Edge Home Finance, NMLS 374881. See you in the next one.